Whenever we talk about IFRS, what here, whenever we talk about this agriculture standard, which is 41, it will be very important for us to appreciate the fact that we're using this standard to do financial reporting for agricultural activities. We know that there are farms which are registered as companies limited. So if they're registered as companies limited, then they'll be able to use this particular standard to be able to do accounting for what we call biological assets. Accounting for what we call biological assets. Accounting for what we call biological assets. So then what are biological assets, ladies and gentlemen? Biological assets are living plants like crops, cash crops, all right? And of course, animals. So whenever you get a question over this particular standard, ladies and gentlemen, you must always know that you are going to do, according to this particular grade standard, we're going to have like this T account, where we are going to have what we call our revenue account. Revenue account for each biological asset, for the crops, revenue account for the animals, all right? And in this revenue account, you're going to do, the standard tells us, in this case, here to have opening stock on the debit here. Opening stock on the debit. We are going to have closing stock. Our closing stock at the end of the year on this side. If we sell anything, we are going to have sales on this side. If we purchase, we are going to have purchases on this side, and then, ladies and gentlemen, we have in this case here our expenses. All our expenses shall be debited like that. All our expenses shall be debited like this. Now, please listen. Whenever we have in this case here, for example, this side being big, if this side is bigger, then we're going to have this side total coming here. And if it is this side of revenues that is more, then you're going to have a profit here. We're going to have a profit here. So we're going to have a profit there. And of course, if it is this side which is bigger, then on the other side, we're going to have a loss from our what here? From our biological assets. So as I introduce this concept, ladies and gentlemen, I would want you to appreciate one thing here. As I introduce this concept, ladies and gentlemen, I would want you to appreciate one thing here. Our double entry principles must be very good. It's all about double entry. So the double entry principles, we are saying that the double entry principles, if you remember very well your financial accounting, you are told in the double entry, we have what we call the famous pairs. The famous pairs. And if you remember these pairs, this stands for purchases, expenses, assets. Please write that down. So these are purchases, expenses, and the assets. They shall always be debited whenever they increase. Whenever they increase, you shall always debit. Whenever they increase, you shall always debit. And then we have these ones. These are revenues or sales. These are liabilities. This stands for share capital. These ones here shall always be done what year? They shall always be credited. I repeat, this is purchases, payouts, purchases, expenses, assets. Whenever you procure a motor vehicle, that's an asset for the company, you shall always debit. So purchases, expenses, assets. Whenever you incur, for example, insurance expense for your motor vehicle, you will open an insurance expense and a debit. Very, very important. And then we have this other side of the coin. So this R stands for revenue, liabilities, and the share capital. What will happen for the three? Whenever they decrease, we shall always be crediting. Could you kindly put up your thumbs up like this if you have been able to write up to where Mwalimu is? But you simply mention there Y for yes. Kindly. Y for yes. So that is very important to me. That's very, very important to me. So in short, when we talk about this particular standard, ladies and gentlemen, when we talk about this particular standard, which really is all about what here? Accounting for agricultural activities, accounting for agricultural activities, then we shall always be remembering two things. And once we remember these two things, then we are at home. We are at home. Actually, it is IAS 41. It is IAS 41. Somebody is asking a question on these pairs. Allow me to repeat pretty fast. So whenever we talk about pairs, it's an acronym that will be helping us to appreciate the double entry pairs. The pairs here, pairs like this. It will be enabling us to appreciate the double entry. So P stands for purchases. P stands for purchases. E stands for expenses. E stands for expenses. A stands for assets. A stands for assets. We have R is revenue. And you see revenue is the same as sales. Revenue is the same as sales. L is liabilities. Liabilities. S is the famous share capital. Share capital. So remember, these three are to be debited whenever they increase. These three are to be credited whenever they do what here, whenever they increase. And of course, the context, the case in context is what I've just introduced to you. Under IAS 41, we have what we call the revenue account. So this revenue account, you will always for the crops. You'll always be having here opening stock. You'll be having here opening stock. You'll be having here closing stock. So on the credit side, we have sales. You see, sales is the same as what here, revenue. Revenue, we are crediting here. So on the credit side, we have sales. So sales will come here. On the debit side, we have purchases. So purchases, we are debiting. And if there are any expenses, we shall always be doing what here? We shall always be debiting. Now, the person who asked this question, I believe now you're comfortable. Is that okay? The person who asked this question, I believe you are now comfortable. Remember, you are doing, it's actually IAS 41, agriculture. It's IAS 41, agriculture. And now people can go ahead and prepare. If you look at this handout that we have this handout, ladies and gentlemen, very great handout here, that I've been able to share with you. We have a great handout. Yeah, I'll be able to tell you the timetable for this class. So we have in this case here a great handout, which I've been able to share with all of you. And I hope a good major will be able to share it with us often whenever we have new students. So I have a very small whiteboard, but we shall overcome. It's better than nothing. So, ladies and gentlemen, the first question here they have asked us to do, is to explain the circumstances under which an entity should recognize a biological asset or agricultural produce in the context of IAS 41 agriculture. The circumstances under which an entity should recognize a biological asset. Number one, the first circumstance that you should be able to find yourself in for you to be able to account for this biological asset. Number one, the company must be owning. So in this case, I can only account for a biological asset if I own it. So we own it. In this case, here, number two, we control it. Remember, for example, when you lease an asset, if you lease it out there, if it's, for example, whatever asset you have, you've leased out there, then you've lost what we call the right of use. So in this case, it is the lessee who is controlling, in this case here, the asset. So if the lessee is the one controlling the asset, then you can't be able to account for that as your own asset. So number one, the asset must be yours. Number two, in this case here, you must be able to control it. And then number three, ladies and gentlemen, the future economic, so in this case here, we shall receive any future economic benefits from the asset. Economic benefit from the asset. We shall receive any future economic benefit from the asset, very, very important. If, ladies and gentlemen, this is an asset that you're not getting any benefit totally out of it, then that automatically means that it doesn't even qualify to be called an asset. An asset is any resource that we expect to be receiving some benefit out of it in the future. So if, for example, I own this asset and it is someone else who is receiving that benefit, then that is not my asset. Assets in this case, I should be able to put money in my pocket. Assets should be able to put money in my pocket. Ladies and gentlemen, number 4, lastly, we have here any revenue stroke costs associated with the asset, associated with the asset must be measured reliably, 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 must be measured reliably. Once you guys are able to write up to there, would you kindly give me a signal? Once you are able to write up to there, kindly give me a signal that we are okay with that one. And ladies and gentlemen, now with your permission, and remember, this is very, very popular. This is very, very popular. This is very, very popular here. And remember, we are owning the asset, we control it, we shall receive any future economic benefits from the asset, any revenue, costs. Please add another one here, fair values. Add another one here, fair value. Fair value. Any fair value. So it is revenue, cost, tax expenses, and any fair value or market values associated with the asset must be measured reliably. For you to be able to recognize an asset, you must always remember those 4 things. Once you remember those 4 things, then you are at home. Thank you. But from there, then they want us to come and do something very easy here. They have given us this second question. They have given us this second question in this second question, what do they want us to do for them, my students? They are telling us here, they've told us here, the following balances were extracted from the books of Shamba Limited as of 31st March 2012. So I can see things happening there. I can see things happening there. Very many things have given me a trial balance. I can see additional information. We are required to do a crop and livestock revenue account in columnar format for the year ended 31st March 2012. So this is an examiner who is wishing me what year? This is an examiner who is wishing me success. Why am I saying he's wishing me success, ladies and gentlemen? Because I will be able to get all the marks without knowing even what I'm doing. Without knowing even what I'm doing. I mean, this is straightforward. You know, failing in financial reporting, that is simply a student who wants to get a fail in financial reporting. If you're just a keen student, then you should be able to get these marks, all of them. So crop and livestock revenue accounts. So then this is what I will do. I will come and write here revenue accounts, crop and livestock. So we have here crop, we have livestock. So we have here crop, we have here livestock. So please remember, I've given you a general format. In the general format, for purposes of you just having this cemented in our minds very well, for this revenue account, we are going to have opening stock here. We are going to have closing here. We are going to have sales here. We are going to have purchases on the debit side. And then, of course, we're going to have all expenses like that. So, ladies and gentlemen, please look for opening stock. All of us. We should be able to look for opening stock in this question. So opening stock in this question. So opening stock in this question. Do we have opening stock? Oh yes. In the trial balance, these are 3 marks. In the trial balance, you'll be able to see inventories as at the beginning, 2011. Inventories. These are opening stocks. So opening stocks, I can see growing crops, seeds, and fertilizers. 12,000. So you can see this 12,000 amount will be put under where? Will be put under crops. The 12,000 amount will be put under crops here. So opening stock crop with their fertilizers and everything, 12,000. 12,000. How about opening stock in this case here for livestock? Opening stock for livestock. Opening stock for livestock. So if you look at livestock, opening stock. So there's a lot of noise around here. It's a lot of noise around here, but we shall overcome, right? We shall overcome, we shall overcome. We shall overcome. I repeat the question. I don't know whether you want us to read it. I mean, I wanted us to do the fairly obvious things. There are those fairly obvious things even before we read it. There are those fairly obvious things, right? Yeah, the obvious things. Like now here we have the livestock. You can see in this case here, livestock, opening stock of livestock is 3,000. Opening stock of livestock is 3,000. Opening stock will be debited always, livestock. And then if you look at this very keenly, you'll be able to see, ladies and gentlemen, opening stock of livestock feeds. Livestock feeds. So in this case here, opening stock of livestock feeds, I can see 3,600. That can only come under opening stock, under the livestock. It can't be put under crop. It's very specific to the livestock. So then we have here 3,600. Just in this case here, let's do the obvious things. Let's do the obvious things. Let's put closing first here. We do the obvious things. So closing stock. So closing stock, of course, this will always be, it can't, closing stock can't go to the trial balance. Closing stock will be under additional information. Closing stock will be under additional information. So somebody wants me to share this question. I will come here and I put it here. Somebody wants me to share this question. So I call it FR, agriculture. Then I post it there. Yeah. So ladies and gentlemen, the closing stock, you'll be able to see the closing stock. The closing stock. Under the additional, if I were you, I would have written somewhere there in my mother tongue that closing stock can never be found in the trial balance. Closing stock in this case here will be always under the additional what here, under the additional information, of which they have given us, ladies and gentlemen. They have told us here the additional information. In the additional information, what have they told us in the additional information? Inventories at the end of the year, which is 31st March 2012, were as follows. Growing crops, 6,000. So 6,000 for crops, 6,000. For crops, 6,000. And then we have closing stock, in this case here for livestock. For livestock, 24,000. 24,000. 24,000. And then we have, in this case here, closing stock for livestock feeds. For livestock feeds, 600. 600. 600. So 600. 600 closing stock like that. You don't have to have any relation for that. 3 marks. Come and give us here our sales. What we were able to sell. What we were able to sell. Is there somebody who can pick from that handout what our sales amounts were? What our sales from the trial balance? Sales will be found in the trial balance. Is there somebody who is able to see how much we sold? From the TV, from the trial balance, is there somebody who is able to see our sales? Our sales. I can see purchases here. I can see purchases here. But I want, in this case here, I want the sales. You can see the sales. Sales of crops, 21,000. Sales of crops, 21,000. Sales of crops, 21,000. And then we have sales of cattle, 6,000. Sales of cattle, 36,000. Then we have some other strange thing here. Sales of carcasses, 9,000. A carcass, of course, is the animal that we eat. Yeah, this cattle, of course, when we slaughter them, their meat is called a carcass. A carcass. So whenever you eat a carcass can't be a crop. That's a dead animal, Dead animal, although it's sold, So in this case here, sales of livestock. In this case here, these 36,000 are the livestock tuliza ng'ombe zikiwa hai. Na zile kuuza zikiwa nyama. Hizi nyama ndizo carcass. So up to here, ladies and gentlemen, are we together really? Up to here, ladies and gentlemen, are we together somehow? Up to here, ladies and gentlemen, are we together somehow? Are we together somehow? Yes. Thank you very much. Then I will be able to continue here. I'll be able to continue. You feel that I'm moving with a lot of speed? Don't hesitate mentioning it to me, then I'll be able to lower the speed, ladies and gentlemen. Then let's look for purchases. I can see purchases. So I can see purchases very well. I can see purchases very well. So purchases, we purchased seeds. Seeds like seeds like wapi. Seeds like wapi seeds. Like wapi seeds. See, seeds are crops. Mbegu za kupanda. Ni kama mwingine artificial insemination, unajua ni ya ng'ombe. Alright? Lakini sasa seeds are crop. So in this case here, we purchased seeds. We purchased seeds. Seeds in this case here, 1,400. And the crops. Then, ladies and gentlemen, if you look at the next purchases here, livestock, 6,000. Livestock, 6,000. We still continue, it doesn't end there. We have fertilizers. So fertilizers will be booked under which biological asset? Can fertilizers be booked really under the cattle here? Can they be booked under livestock? Fertilizers, no. Fertilizers are enhancers for these crops. So fertilizers will go under crops here. We purchased fertilizers worth 1,500. We write that under purchases of crop. 1,500. And then of course you can see we purchased livestock feeds for 420. We purchased livestock feeds for 420. We purchased livestock feeds for 420 like that. Or 420 like that. Ladies and gentlemen, now I've done what we call the obvious. So here I've earned some obvious marks. It is after now doing this, we shall be able to come and detail our expenses. So we shall be able to come and detail all our expenses now. And remember, to revenue account, we normally take specific expenses. Those expenses that you can tie to a biological asset. There are two types of expenses basically. There are those expenses, ladies and gentlemen, that are general. Incurred for what year? Incurred for all the biological assets in the farm. Like for example, you have some employees. But unless they give you the criteria to apportion employee salaries, or they tell you that specifically this is an employee who was employed to take care of their livestock. Otherwise, you know that employees normally juggle in between. They normally juggle in between. Employees normally juggle in between the various biological assets. So when you have their salaries, then their salaries in this case here will be general. I'm repeating here, ladies and gentlemen, whenever it comes to us booking expenses that we shall book are the ones that are direct or what year, specific. Direct or specific. Thank you very much, Ali. Direct or specific here. All right. So now we start, ladies and gentlemen, here. Now we are looking for our expenses. So the very best way that I normally tell my students here to work out, to be able to know which expenses are very, very specific, simply run through your trial balance first. You can run through your trial balance first. So for example, like now these farm workers' wages, you see 3,000. Given for what year? All the biological assets. So this 3,000, you can't book it here. No. Manager's salary, we are given manager's salary, ladies and gentlemen, which is 3,600. However, for manager's salary, they have given us the apportionment criteria. Right there, manager's salary, look at note number 2. Manager's salary is charged to livestock and the crop revenue accounts in the ratio of 1:3. Now the manager's salary is 3,600. If you look at the manager's salary here, it is 3,600. But this is to be apportioned to the 2 in the ratio of 1:3. So basically they are transforming these to become specific expenses. So we have, ladies and gentlemen, here, manager's salary, we have here, manager's salary. So we have here, manager's salary. So we have here, manager's salary. Manager's salary is 3,600. But this is to be apportioned. This is to be apportioned in what criteria? This is to be apportioned in what criteria? This is to be apportioned, ladies and gentlemen. This is to be apportioned In what criteria? They have told us very vividly. They have told us here, manager salary is to be charged the livestock and the crop revenue accounts in the ratio 1:3. So 1 is for livestock, 3 is for crop. So 1:3. So we have here 1:3. So we have here 1 for livestock 1, and then in this case here crop 3. So these are 4 portions. So this will be a quarter, this will be 3 quarters like that. So can somebody give me 3,600 times a quarter? So livestock will be 3,600 times a quarter. Livestock will be 3,600 times a quarter. Livestock will be 3,600 times a quarter. 3,600 times a quarter. 3,600 times a quarter, which gives me 9. Remember, he wants to confuse you. You see, I started with the word livestock, but you're bright. We know that this manager's salary, the manager's salary, we shall come and book them here. Livestock is 900, and then our crop we have 3,600 times 3/4. Crop we have 3,600 times 3/4, which will end up giving us what figure somebody here for crop? 2,700. 2,700. I couldn't. So have we understood this thing really, all of us? Have we understood how you're booked? Remember, all expenses, salaries are expenses, they shall be debited. They shall be debited. Have we understood this? Have we been able to write it down? Because you writing down is the most important thing as well. Is the most important thing as well. Now, ladies and gentlemen, after that, thank you so much. Thank you so much. And after that, you'll be able to come here straight away and then look at other expenses. So other expenses, just be keen. Just be very keen. What you need to do is to be very keen. So we have farm worker wages, workers' wages, leave that out, manager salary out, cash in hand is not an expense. Receivables, these will go to the balance sheet, the statement of financial position. Farm tools, these are what here? Farm tools are our assets in the farm. Then we have here repairs to farm machinery. Repairs to farm machinery is very good. But now, which biological asset does it belong to? It's a general expenditure. This will go to our income statement. The same case with our staff welfare. This will go to our income statement. Farmhouse expenses as well, are what are not specific. Purchase of seeds, this we have seen. Wages, look at these wages. I can see wages, this is very specific. So I can see wages, livestock, this is very specific. So I'll come and write wages, very specific. So this is a direct expense. Wages for livestock is 9,600. Wages for livestock is 9,600. Wages for livestock is 9,600. Wages for livestock is 9,000. At the top, yes. Of course, our figures are in what here? In shillings thousands, yes. Our figures are in shillings thousands, remember. All our figures are in shillings thousands, yes. Thank you very much, Wesley, for that. All our figures are in shillings thousands, yes. Thank you very much for that. All right. So, ladies and gentlemen, look at these wages. They have told us that wages are worth what here? 9,000 what here? 600. And I've been able to book them here very nicely. So no wages are specific here to the crop. They're only specific to the livestock. I've just told you that these revenue accounts, normally we use revenue accounts to capture specific expenses. So the gentlemen, up to here, are we together? Up to here, are we together somehow? Are we together? Are we together up to here? Are we together? Yes. Thank you so much. Great. At least when I get some affirmations like this, and I also get questions, I know students are struggling to really understand. Then you can see we have expenses, ladies and gentlemen. These expenses here are biological asset specific. They are biological asset specific, and therefore they shall go to the revenue account. So we have here, I'll call them expenses. So we have here expenses that I'm just debiting here. Expenses for the crop. Expenses for the crop, ladies and gentlemen. Expenses for the crop we have, if you can see very well, there's 6,000. 6,000. And then, ladies and gentlemen, we have in this case expenses for livestock. Expenses for livestock, I can see there straight away 7,380. 7,380. Please write up to there. Please write up to there. Right up to there. I've booked this as expenses for each revenue account simply because they are what they are very specific. Erua is trying to capture. So what I need to do, first of all, is to send to him. So that we are doing. So Erua, there is a question that we are doing there. There's a question that we are doing there. You should be able to download it. All right. Yeah. So expenses for each biological asset we've been able to book. Ladies and gentlemen, after that, then we look for other expenses. You're simply combing through your trial balance to understand your trial balance very well. So these have been able to book. What is your comment on these administration expenses? What is your comment on these administration expenses? What is your comment? Of course, even the additional information, they haven't told us anything. So these are what we call common expenses. What in management accounting you call overheads. So those ones cannot come to revenue accounts. Because revenue accounts, ladies and gentlemen, we normally take what we call, if there are expenses, crop specific, livestock specific expenses. Interest on mortgage cannot be charged to crops. All right. We can see inventories at the beginning. So inventories at the beginning already that we've been able to capture that. Then I can see general insurance premium. I can see payables, yes and gentlemen. Sales, these have been able to capture sales. Farm machinery, this will go to the balance sheet. Land and building will go to the balance sheet. Then let's now look at the notes to this table. Additional information 1, I've been able to take care of that. Note 2, I've been able to take care of that to apportion manager salary. Let's look at note 3. Valuation of farm tools here. Valuation of farm tools as at 31st March 2012 was 1.2 million. Depreciation on farm machinery is to be provided at 20% per annum or book value. Depreciation and repairs on farm machinery to be charged the general income. So they have told us this will go to the general income statement. I can't bother about it at the moment. Number 4, insurance prepaid amounted to 240,000 and is to be charged to the general income statement. That cannot, in this case here, affect our specific revenue biological assets accounts. Look at note number 5. Manure worth 180 was used in the farm, while farm crops used to feed the livestock were valued at 390. Let's reason out, first of all, the manure statement that we have manure of 180, and this manure of 180 was used where so manure 180 was used in the farm. So then, gentlemen, who produces this manure out of our biological assets? We know that livestock is the one that produces manure. And then it became manure, which in this case here was eaten up by what here? By our crops. We use this manure as fertilizer. So then there, I can see what we call an output and an input. This is an output from where? From livestock. And an output from livestock, we shall assume that that is a sale. And we say that our sales will always be credited. Our sales will always be credited. So in this case here, we have manure. So manure in this case here that was taken up. So this manure here, we are looking at an output here. So this is a livestock output. I'm going to pin it here in thousands. This is 180 like that. But now on the side of this other biological asset, which is the crop, we have here manure. So manure, in this case here, becomes what here? It becomes an input. Input under crops. Input under crops. So we've gotten this manure from these cows, from the cows. And the same manure, we've been able to take this as an output from these cows and taken them in to what here? To our crops. Right. So in this case here, we are going to charge the crops account. So crops account. So on the crop account here, we shall be able to mention 100 what here? 180. So it is about output from where? Output from livestock. So we shall treat 180 as what here? As a sale. And it's an input, it's an expense to crops. It's an expense to crops. It's an expense to crops. If you understand this, then we are really doing a very good job. We are really doing a very good job. We are really doing a very good job. All right. Then we shall be able to proceed, unless there is a question from your side. I wasted a lot of time at the beginning, and I don't want to do this question another session. I want to finish everything here now. Then we've been able to account for this manure of 180. And then these cows also never left us like that. They never left us like that. I mean, they had to eat some crops, right? Crops used to feed the livestock were valued at 390. So in this case here, we got some crops, which we took to these cows. So this time round, this will be an output of crop. So in this case here, we have, ladies and gentlemen, crops consumed by livestock. So here, we are selling them as an output. So crops consumed. Crops consumed by livestock. How much are they worth? How much are they worth? These crops. How much are they worth? Those crops. So crops consumed by livestock. So these crops were being given by the crop section. Were being given by the crop section. So in this case, it's an output and a crops. How much were they worth? Please talk to me. How much were they worth? How much were they worth? Is it 390? 390 everyone? And we're going to cut the 3 zeros because these are in shillings thousands. So remember, this is an output of the crop section here. But now when we come here, it becomes an input. So this is an output here. This is an output here. But now here, crops consumed. Crops consumed by livestock. So this here is an input which goes under the livestock, 390, like that. I hope that is clear. I hope this is clear. And please feel free to ask questions. Remember, students at this level, they normally, not even at this level, students, CPS students, they normally call me the chief ninja. The chief ninja. So you should never ever fear asking questions, making contributions, because I know you're also equally bright. Making contributions because I know that you are equally what here? Equally bright. Equally bright. Equally bright. All right. Then if you allow me, ladies and gentlemen, I don't want to cover the book. If you allow me, ladies and gentlemen, I will be able to continue with this question here. So this question here, they are telling us, crops consumed by farm workers. No, bad debts. Bad debts of 300 to be written off. Of course, bad debts can come to crop accounts, can come to livestock accounts. Look at note 7. Crops consumed by the farm workers were valued at 600. This amount was recovered from their wages. What we do, there is nothing for free. What we do, ladies and gentlemen, these crops worth 600 were, of course, given to, let's give them to the workers. How do we do it? We're going to assume a sale here. So in this case here, we have crops to workers. So we have here crops, workers. They are worth, in this case here, 600,000. And then come to here, we shall be able, we are being told that these workers took these crops as part of their wages. As part of their wages. How do you maneuver? I'll be able to show you that. Don't worry. As part of their wages. As part of their wages. So then what you shall do, ladies and gentlemen, here, you shall be able to come. You shall be able to come here and mention here crops eaten by workers here. So we have in this case here crops eaten by workers. Eaten by workers. So basically my board is not very, very big. These are wages. These are expenses. We shall capture them here. We shall capture them here. So and these crops are worth how much? These crops are worth 600. Don't book them under livestock. 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 No. Don't book them under oops. Don't book them under livestock. So we are told, I repeat here, before I answer this gentleman, we are told, ladies and gentlemen, here, that crops consumed by the farm workers were valued at 600. This amount recovered from their wages. were recovered from their wages. So it's an expense. So for us, what we shall do is to assume straight away that here, where we take the sales are normally taken the credit side. So in this case here, crops to the workers, we just assume we sold crops worth 600 to our workers. And then go to, because we never paid these workers at the end of the day. So go to, in this case here, the expenses part, and book this as what here, book this as an expenditure. Book this as an expenditure. So in part here, input and what here, output. Like now here, we are told that manure worth 180 was taken to the crops. Manure worth 180. So you ask yourself, who produces this manure? It is the livestock. So manure and the livestock, of course, that is an output. So I will go, if it's an output, remember our assets. Outputs in this case here, you're losing, right? You're giving away. All right. So we're giving away. So you'll come here and the manure as an output, you credit here. And then there is another biological asset that is gaining. So whenever it gains, we debit. So you'll be able to come with this manure thing here. But now this time around, remember, it is going under crops here. Because it is an output from livestock and an input under crops. Under crops. So this shall become clear as we get along. We shall like this. We shall really like this. We shall really like this. All right. So, ladies and gentlemen, after that, what else do we have here? Do we have any other stuff? Yeah. Do we have any other stuff? Oh, yes. Oh, yes. We are told here the shareholders provided farm labor valued at 1.2 million. So these shareholders, they came and did something in the farm, and we paid them 1.2 million. But remember, we never paid them any cash. Yeah, the shareholders provided farm labor valued 1.2 million, while crop valued at 1920,000 were donated to charity during the year. So in Guinea shareholders, this is very, very general because it is not specific to any biological asset. So you shall not bring it here. But you can see here we have crops that were donated. This is very, very specific to a biological asset. Crops valued at 1920. So to me, these crops donated, there is something that getting out of our system. So in this case here, we have donations. We have donations here. We have donations, crops, worth 1920. Donations shall always be expensed. Donations shall always come here under expense section. So come and tell us donations. Come and tell us here donations. So under crops, you simply mention here 1920 like that. And that is it. So now come and do your balancing. Now do your balancing of your accounts. 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 So we start with the crop account. If I were you, I would get somebody in this case here punching all this. Another person in this case here punches all that. And then they tell us which side is bigger. Which side is bigger? Yeah, donations, why are we creating them? A very good question. Remember the concept is that an asset has reduced. An asset has reduced. Now, Betty, whenever you pay, for example, cash, or say, or rather you pay for an asset, all right? Say you've paid 10,000 to acquire that asset. Remember, you must go to your bank account, you credit, isn't it? Because I mean, the asset known as bank has reduced. Of course, the other asset account has increased, but the thing is, whenever an asset reduces, you must always credit. If, for example, you have motor vehicle whose net book value is 100,000, and you sell that motor vehicle, what are you supposed to do? You're supposed to go to the motor vehicle's account to show that it has left the company. You credit. So even here we have donated crops. So crops, of course, have gone out. So whenever they go out, you must always do what here? Credit. So you credit. So here to show that crops, otherwise, you're going to have an overstated crops account. So we must credit to show that crop has also gone down. But again, remember, according to IFRS, all donations shall be done what shall be expensed. So come to the expenses part under book the donations again, under the crops, under the crops. How Betty have answered, you always strive to answer your questions to my best of knowledge. And of course, if there is a ninja here, who can also put in a few words here and there, to notice all of us here are teachers. All of us are teachers here. All of us are teachers. So is there someone who is doing abracadabra here adding? If I were you, I would add all this. I write an answer down here. Standing once hapa. Na add blah 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 blah. Naandika hapa answer. Na add here crop blah 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 blah. Naandika hapa answer. Chini nachagua ile kubwa ni gani? Naweka pale na pale. Ile kubwa kabisa ndio nakamata nayo. Ndio naanguka nayo. So the blah 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 guys, what are they getting? The blah 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 guys. The blah 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 guys. Which side is bigger and with what amount? Which side is bigger and with what amount? For the crops first. 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 What do we have, ladies and gentlemen, here? For the crops first. For the crops first. Crop 27,300 and then Philista's 29,910 is bigger. And she is telling me this is the bigger part. So takuja point over the bigger for 29,910. And then now we have here 29,910. Now, of course, she added all these and she was able to get 27,300. So it means that this part of revenue is higher than this part of expenses and purchases. So it means that this company has gotten a profit here. For crop, we have a profit. So this profit is 29,910 minus 27,300. Is there somebody who is able to give me this profit here? It's a profit which I'll book here. It's a profit which I'll book here. $26.10. Betty, you never gave me feedback. Were you convinced with my answer, Betty? Were you convinced with my answer, Betty? Were you convinced with my answer? Or do you want more explanation? All right. So go and do the same for our livestock. Do the same for our livestock. Go and do the same for our livestock. Do the same for our livestock. Tell me the bigger part. Great. Thank you very much. Tell me the bigger part. So for livestock, tell me the bigger part. Tell me the bigger value for livestock. Which is the bigger value? Remember, everybody is a ninja. Everybody is working out things. Everybody is adding, add. Write the answer down here. Down. And then I'll come and add. In this case here for livestock, I add down. And then I choose the one that is bigger. I choose the one that is bigger. So according to Betty, we have here 69,780 is bigger. 69,780 is bigger. So if the credit is the one that is bigger, then again, we have made a profit. Then again, we have made a profit. 69,780. Then again, we have made a profit. We have made a profit. A profit of how much? A profit of how much? We have made a profit of how much? We've made a profit of how much? We've made a profit of how much? Thank you, Isaac. A profit of how much? Can somebody be knowing the profit here? Somebody is telling me it's very huge. 26,490. 26,490. Profit of 26,490. A profit of 26,490. That is it. A profit of 26,490. Remember in Casnet, the way they mark, you don't have to get like everything. It's all about you posting a maximum number of what here? Correct entries. Maximum number of correct entries. And then now we shall be able to go to part 2 of the question. So part 2 of this question, now they want us, ladies and gentlemen, to give them the general income statement for the year ended 31st March 2012. The general income statement. So general income statement. Please mark these 2 figures, they are very, very important. These are the revenues now coming from each biological asset. These are the revenues coming from each biological asset. These are the revenues coming from each biological asset. Each biological asset. These are the revenues coming from each biological asset. Now I'm doing the income statement. 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 So remember, you must start by writing the name of the company. It's called Shamba. It's called Shamba Limited. Now you talk of general income statement. General income statement. Remember, all our figures are in shillings. What here? Thousands. So we start with our revenue. So the first one, in this case, is revenue. Revenue from crop. Revenue from livestock. Revenue from crop. And then we have revenue from livestock. Yeah. Shamba Limited. General income statement for the year ended. Or for the period ended. Yeah. Great. Thank you very much. Thank you very much. Thank you very much. So, ladies and gentlemen, please get hold of your what? Yeah, get hold of your question. So get hold of your question. So if I get hold of my question, what am I saying here? That my revenue crop is 2610. My revenue crop is 2610. My revenue livestock, you guys are giving me a profit of 26,490. 26,490 like that. So can then somebody give me the total revenue here? Can somebody give me the total revenue? Is there anybody who is able to give me the total revenue? Can somebody give me the total revenue? Give me the total revenue. 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 Somebody give me the total revenue. 29,100. So we have here our total revenue. Our total revenue is 29,100. Our total revenue is 29,100. So for lack of space, you'll allow me to just delete this for lack of space. And then now, which expenses are we going to subtract? So we'll come and less the general expenses. So we less the general expenses. We less the general expenses. We shall less the general expenses. The ones that are overheads, the ones that are common to both. All right. So we look at our trial balance. At our trial balance, we are able to see the farm workers. The farm workers expenses or wages. If you look at the question here, if I come and say page up again, yeah, you are able to see the farm workers wages, this one here. It is neither in crops, it's neither in livestock. It's a common expenditure. So the farm worker wages, 3,000, 3,000, 3,000. Put this in brackets like that. All right. Now, the gentlemen, from there, we can now go down slowly. We can go down slowly. What are we able to see here? You can see farm workers' wages that we have been able to handle. You can see manager's salary that already we handled, where you would have ticked long time ago. Cash in hand will go to our balance sheet. Receivables will go to our balance sheet. Then we have farm tools. These are our assets. Assets in this case here will be depreciated. Yeah. So depreciation will come to my general income statement. So in this case, ladies and gentlemen, go to note number 3. You go to note number 3. What have they told us here? Valuation of farm tools as at 31st, 2012 was 1,200. And then, of course, you can see in the trial balance, the farm tools are worth 1,500. And we have done fair valuation of 1,200. So then I'm able to see reduction in value of farm tools. So I'm able to see farm tools depreciation. So I'm able to see farm tools depreciation like that. 1,500 minus 1,200. So this gives me a loss in value of 300 that has to be charged to our income statement. Still on the same note. On the same note, my friends, note number 3, they are telling us that depreciation on farm machinery is to be provided at 20% per annum on book value. Depreciation and repairs on farm machinery are to be charged to the general income statement. General income statement. So, gentlemen, please listen. We have here depreciation of what here? Farm machinery. So we have here depreciation of farm machinery. They've told us that this is 20% of the book value. So go to your trial balance. Go to your trial balance. So in your trial balance, then you should be able to come and look for information regarding who? Information regarding farm. You can see the farm machinery are 146,800. So 20% of 46,800. 20% of 46,800. 46,800. Is there someone who is able to give me this depreciation of farm machinery? Anybody who is able to give me this depreciation of farm machinery? Depreciation of farm machinery, Betty Koech, 9360. I'm waiting for somebody else to confirm. I'm waiting for somebody else to confirm. 9360. Thank you very much. These are 3 marks. These are 3 marks. But after that, I will be able to go straight away. Still on the same note, they've spoken about repairs to our machine, our farm machinery. So we have here repairs, same note, farm machinery. Let me just finish this note for me to be able to put a tick. Yeah, they've spoken about repairs to farm machinery. So is there somebody who is able to see repairs to farm machinery? Yeah, anybody who is able to see repairs to farm machinery? Repairs to farm machinery is the repairs to farm machinery is the. So if you look at our trial balance, we have repairs. We're able to see repairs here. Repairs to farm machinery, 300 volt. You're right. Repairs to farm machinery, 300 volt. Repairs to farm machinery, 300 volt. So then after that, you'll be able to move on to something different. So what are we looking at? Remember, we are still following our trial balance down. We are following our trial balance down. You can see we have staff welfare. Staff welfare, it has not been stated whether they belong to cash crops. These are general welfare things. So we have their staff welfare, 600. Staff welfare, 600. So we have staff welfare, 600. Thank you very much. Ladies and gentlemen, after staff welfare, we have in this case, you can see farmhouse expenses. So we have here farmhouse. We have here farmhouse expenses. So we have the farmhouse expenses. And the farmhouse expenses here, they are worth how much? Farmhouse expenses, they are worth 720. 720. Farmhouse expenses are worth 720. After farmhouse expenses, just look around. You can see these are biological farm specific. And after all, we know where prices went. Wages, you can see they are crop specific. Even these expenses, they are what biological asset specific. But now we have administration expenses. So administration expenses, I can see a figure of 2,400. Administration expenses. So administration expenses, these are 2,400. Administration expenses are 2,400. So the gentlemen, I would want to pause there and ask whether you guys have been able to write and reach exactly where Mwalimu has reached. Have you been able to reach where Mwalimu has reached? Have you been able to reach where Mwalimu has reached? Okay, great. Then we can continue. Great. Then we can continue. Apart from administration expenses, what else do we have here, my friends? Apart from administration expenses, we have interest on mortgage. Interest on mortgage, of course, is a common thing. So we have interest on mortgage. Interest on mortgage, it is 2,700. Interest on mortgage. So we have here interest on mortgage. Interest on mortgage. Interest on mortgage. So the interest on mortgage is 2,700 and deductible. 2,700 deductible. After interest on mortgage, ladies and gentlemen, what are we able to see down here? After interest on mortgage, you can see inventories. You can see growing. No. We have general insurance premium. You can see the general insurance premium. General insurance premium. So the general insurance premium, you have to be very bright. the general insurance premium, they have given us, the general insurance premium, they have given us a figure of 2880. A figure of 2880. General insurance is 2880. But out of this amount, which is in the trial balance, there is a prepayment. There is a prepayment. Look at note number 4. Please write note number 4 there for your revision. That the insurance prepaid amounted to 40,000 and it is to be charged to the general income statement. So of course, it means that this 2880 figure has that 240. This 2880 figure, this 2880 figure has these two. Is it 2400 or 240? Is it 2400 or 240? It is 240. It is 240. So we should be able to remove it out of this, and then we take it as a current asset in the balance sheet. The prepayments are supposed to be taken to the balance sheet as current assets. That's your money. It's your money. It's your money. So then what is this general insurance premium expense for this year? Anybody who is able to give me this general insurance expense for the year? Anybody who is 2640? Thank you so much. 2640. Thank you so much. So then just continue with your trial balance. Just continue with your trial balance. Just continue looking at the trial balance now. Oh, and my body is very small now. We're almost finishing. So in this case here, I was up here. So I've been able to see generate payables. I know payables cannot come here. Payables cannot come to the income statement. Payables will go to, just like bank balance. These are balance sheet or statement of financial positions. Sale already we have it. Farm machinery we have it. Then we have in this case here land and what here? Land and buildings. You know that these ones will go to the balance sheet. However, let's look at other notes, ladies and gentlemen. Let's look at, for example, note number 6. Note number 6. Bad debts of 300 are to be written off. Yeah, let's first of all write off bad debts. Bad debts are expenses for the entire firm. So mention there, bad debts, not 6, bad debts. Mention here, not 6, bad debts. Where will I write? We shall overcome bad debts. Bad debts. So we have here bad debts. So bad debts, what we have? Bad debts, we have a figure of 300. Bad debts, we have a figure of 300. So how did we arrive at 29,100 as total revenue sum? Sorry for not showing you this very well. This 29,100 is a sum over our profits. If you remember, we had profit from crop, and then we had profit from livestock. Yeah, if you remember, was it 26 something? If I remember very well, crops gave us 2610. Crops gave us 2610, and the livestock gave us 26,490. Yeah, from the revenues account. I hope some of you are there with us from the very beginning. I hope some of you are there with us from the very beginning, and you're able to see crops 2610, livestock 26,490. When you add the two, you shall be able to get 29,100. I already did this for purpose of saving space. All right. Ladies and gentlemen, if you come and read this very well, we still have something very important here. We still have something very important here. Still not number 6. And then we have an allowance for doubtful debts of 4%. Many students are not able to do this provision for doubtful debts. Many students can't do it. Provision for doubtful debts. Provision for doubtful debts. Not many students will be able to do this. Many students have marked CASNEB exams severally for many years, really. Among those oldest markers, examiners, especially of financial reporting, financial management. Yeah. So then we have, ladies and gentlemen, bad debts. We have your provision for bad debts. So this provision, they have told us it's 4%. Remember, we do provision for bad debts on the company's receivables. On the company's receivables. So is there someone who is able to see the company's receivables? On the company's receivables. So on the company's receivables, what we have here on the company's receivables. So on the company's receivables, if you look here, you're able to see the receivables of the farm. You will be able to see the receivables of the farm here. Receivables, we can see a figure of 18,000. A figure of 18,000. So it will be 4% of 18,000 net off any bad debts. Very many guys will forget to net off the bad debts. Once bad debts are written off, then they have to be deducted out of this. They must be deducted out of this. So it will be 4% of the net receivable. 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 Betty White is getting 720. I would want in this case here to hear from the others. Are they also getting 720? Remember, it will be 4% times, put into brackets, 18,000 minus 300. 18,000 minus 300, and then you give me an answer. Please confirm whether Betty, Wesley is getting 420. Wesley is getting 420. Are we using our calculators very well? Are we using our calculators very well? Yeah, Drusilla is saying 700 what here? They are saying in this case here 720. Somebody is getting 600. Remember, this is 300, this figure, isn't it? Please, what is 18,000 minus 300? No, it's about body mass. You must, so 18,000 minus 300 is 17,700. Times now, remember body mass. Remember body mass. You must first of all handle what is in brackets. You must first of all handle what is in brackets. Body mass, body mass, body mass. So they're telling me that the correct answer is supposed to be 708. And Betty and the other guy who got 720 confirmed that. Remember body mass, you start with brackets. You start with brackets, yeah. Kyle, 708. Thank you very much. Thank you very much. Thank you very much. 708 now. So that is very, very good. So allowance for doubtful debts, many students are not able really to get this because they forget the netting off effect. They forget the netting off of any specific bad debts written off. They normally forget that. They normally forget that. And then, ladies and gentlemen, you come in this case and continue reading your notes. Just continue reading your notes. Come here and continue reading your notes. You are done at note number 6. You have done that. Note number 7. Crops consumed by the farm workers were valued at 600. This amount was recovered from their wages. That we finished. Then we have note number 8. The shareholders provided the farm labor valued at 1,200. It is at 1,200 now we need to come and remove here. So in this case here we have a labor cost attributed to shareholders. It's an expense. We can't say that we have gotten free labor. No, we have to pay these guys in one way or the other. We must pay them in one way or the other. So in this case here we have, ladies and gentlemen, labor cost to shareholders, from shareholders. Our figures are in thousands, 1,200. So that is it. Come and give me the profit before tax. Is there someone who is able to give me this profit before tax? So you take the total revenue, you subtract all these expenses up to here. Chop, chop, the ninja way. Chop, chop, the ninja way. Chop, chop, the ninja way. You should be able to give me the profit before tax. Everybody should be able to do this, the ninja way. So you are taking the revenue is 29,100. You subtract this, you subtract all these expenses, and then you give me the profit before what year? The profit before tax. Yeah, according to this ninja, they are getting 48.72. 48.72, Kibisu Joanne. So do we have any other person who can confirm 48.72? Thank you so much. How I wish this camera of mine can come down further. Profit before tax is 48.72. Now you come and less tax here. You come and less tax there. So please go ahead and less taxation. Please go ahead and less taxation. Go ahead and less taxation. Please go ahead and less taxation. So is there somebody who is able to give me the tax figure? Is there anybody who is able to give me the tax figure in this question? Please go to the tax. Tax will be covered. These are free mark denominator exam. This will be a free, indeed, this will be a totally free mark. So income tax expense is 1,800. If you chop the 3 zeros. Income tax expense is 1,800. If you chop the 3 zeros. So we have here income tax 1,800. Income tax 1,800. And then we'll be able to come and give me the profit after what year? Profit after tax. So is there someone who can get this profit after tax? Which is profit for the year? Profit for the year. profit for the year. Anybody who is able to get this profit for the year, profit after tax. Anybody who is able to get this profit for the year? Yeah, 3072. Once you get profit for the year, now we have the profit carried forward. Come and add retained earnings, brought forward, so that you can be able to take it to the balance sheet. So retained earnings brought forward at the beginning of the year. Is there someone who can see these retained earnings brought forward? Anybody who is able to see these retained earnings brought forward? Retained earnings brought forward. Anybody who is able to see these retained earnings brought forward? Retained earnings brought forward from the trial balance. From the trial balance. You can see these retained profits brought forward of 6,000. So retained earnings brought forward 6,000. So that in this case here, we have here 9072 as the retained earnings carried forward to our balance sheet. Our balance sheet, which is a statement of financial position, So up to here, ladies and gentlemen, somehow, are we together really? Up to here, ladies and gentlemen, somehow, are we together? Up to here, somehow, are we really together? Oh, it's only one student who's confirming that we are together. Only one student. How about the other students? We are together. Then if you allow me, I will be able to put the last section of this question. The last section of this question is not tough at all. I like the balance sheet because balance sheet has got so many free marks. Balance sheet, I'll be able to get so many free marks. Balance sheet, I will be able to get so many marks for free. Statement of financial position as at 31st March 2012. As at 1st 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 March 2012. All right. So what do I have here, my friends? So my friends, what I have here, is an opportunity for me to be able to showcase that I'm so good in doing balance sheets. And my balance sheet will have to balance. A serious student's balance sheet, like in these questions of agriculture, IAS 41, they should be able to really get everything right. So they want me to do a balance sheet. So of course, I know you guys are very good in the preambles, the one of writing the names. So we have the Shamba Limited. Statement of financial position as at 31st March 2012. You underline. So you start with assets as usual, and the very first asset for you to capture here are the non-current assets. So you mentioned the non-current assets. So non-current assets, what do we have here? Somewhere there, if I remember very well for non-current assets, I have some figure for machinery, farm machinery. The first one is farm machinery. So we have here farm machinery. I can see farm machinery. We have a figure of 46,800, but I'm not stupid. I remember very well that there was depreciation for this farm machinery. Are you able to remember the farm machinery depreciation? Is there anybody who is able to remember farm machinery depreciation? Anybody who is able to remember farm machinery depreciation? How much? Farm machinery depreciation. How much? Farm machinery depreciation. How much? From the income statement, we have that farm machinery depreciation. From the income, yeah, 9360. So can you kindly give me this difference here? Shillings, thousands. Can you kindly give me this difference here for farm machinery? What do we have there, ladies and gentlemen? For farm machinery, what do we have, ladies and gentlemen? For farm machinery, what do we have, ladies and gentlemen? For farm machinery, what do we have, ladies and gentlemen? Bracadabra. So I'm being given a figure of 36,940. 36,940. Can somebody confirm that figure or disapprove that figure? 46,800. 46,800 minus 93, 60. Can you show you're using a calculator very well? Tell me what are we getting there. Somebody confirm. I like confirmations, like 3 or 4 of them. I like confirmations. 37, whose figure do I believe? Now somebody has confirmed that 37. Please, my sister Margaret, check again. 37, 440. After that, we have buildings. We have land and building. We have land and building. So land and building, they have given us a figure and they never hinted to any depreciations. Land and building, they never hinted to any depreciations. So land and building, what figure do we have here? 120,000. 120,000. Whenever there is land, you can't talk about depreciation unless they isolate building. So after that, we also have some other non-current assets known as farm tools. Farm tools. So if you remember farm tools, they did evaluation. They did evaluation at the end of the year, and the value was 1,200. The value was 1,200, you remember. Or you can begin with the 1,500, then you subtract the depreciation of 300 to get that 1,200. Up to here, are we okay? Are we okay, ladies and gentlemen? Up to here, are we okay? Thank you so much. Then we go to current assets. So now here we have current assets. We have current assets. So current assets, what do we have? If you look at your question very well, we have receivables. We have receivables. So receivables again for the years that I've been marking these things, I can assure you, not many students will get receivables very well. Remember receivables, we have 18,000. But don't forget that we had some specific bad debts of 300. And then if you remember, we had general provisions of 708. General provisions of 708. I'm able to remember those figures. So receivables, how much should we be able to put here? Remember receivables, we began with 18,000, but there were specific debts of 300. So 16,992. So we have here 16,992. Is there any other non-current or other current asset you guys are able to remember? Oh yes, inventory. Inventory, go to the notes. Specifically, note 1 is where you'll be able to get closing inventory. We don't bring opening inventory here. We shall always bring closing inventory. Note 1 is where we have the closing inventory. Note 1 is where we have the closing inventory. So closing inventory, ladies and gentlemen, note 1, you can see these ones here. You add all of them, 6,000 plus 24,000 plus 600. So we have here 6,000 plus 24,000 plus 600. So can somebody give us this inventory figure? Can somebody give us this inventory figure? So inventory, 3,600. So we have here 3,600, 3,600. And ladies and gentlemen, of course, I have cash. A cash is a current asset in the trial balance. Cash is a current asset in the trial balance. So the trial balance, are you able to see cash in the trial balance? Ladies and gentlemen, in the trial balance, we shall look for cash or the bank amount. So I can see cash in hand, 15,600, 15,600, 15,600. And that is something that I know all students here will forget, but I will never forget. As an expert of financial reporting, having worked as a CFO of one of the biggest software companies in the world. I was a CFO of a Swedish company, which is present in 140 countries. 140 countries. So there are things I can't forget. So we have here the prepaid insurance, the prepayments, the prepaid insurance. So is there somebody who is able to remember what the prepaid insurance prepayment of premiums, insurance premiums here? Are you able to remember that amount? Prepaid insurance. If I were you, I would put even the note. This was a note 4, if you remember. So 240. So please give me all the total assets here. Please give me all the total assets. How much do we have? Total assets. Is there somebody who can just add for us, spread it for us, and give us total assets? Like a ninja. The 7,440 plus 120,000 plus 1,200 plus 6992. Nobody's waiting to be given figures. All ninjas in this case, you fight. They fight. All ninjas in this case, you fight. We shall 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 fight. How much do we have as our total assets? So according to Margaret, we have 222,072. 222. According to Margaret, we have 222,072 like that. And then now, as a gentleman, I would have preferred going down here with that. No, we are not thieves. These assets here must be accounted for. How are they financed? So, and remember, asset financing, we look at the owner's equity or liabilities. So that you'll have to allow me, because of lack of space. Yeah, Mutu is asking whether we include the closing stock for the crop and livestock in this statement. We normally put every closing stock, whether it belongs in this case here to crops or to livestock. You add them. That's what we did. You add them. You add all of them together. Thank you for asking the question. So please allow me to wrap this, and then I'll be able to come here and I'll be able to do what here? A column for what here? A column for equity, a column for equity and liabilities. A column now for the financed by equity and liabilities. Equity and liabilities. So then we have the share capital. Share capital, we start with share capital. Please go to your trial balance and then pick the share capital. Go to your trial balance and then pick the share capital. Is there anybody who is able to pick? You can see here ordinary share capital. Ordinary share capital, 163,200. 163,200. 163,200. And then we have retained earnings is a form of equity. Retained earnings is a form of equity. So retained earnings, you have to be very, very bright. We have the retained earnings now that we have a cumulative retained earnings carried forward. Carried forward. In the income statement, are you able to remember that figure? Was it 90? That figure, is there somebody who is able to remember that figure really? Is there anybody who is able to remember that figure really? 9072. So 9072, and then remember, there are some special retained earnings. There's some special retained earnings where these workers did some work and we never paid them. Do you remember that 1,200? Do you remember that 1,200? Do you remember that 1,200, ladies and gentlemen? Yeah, free labor by shareholders. So those shareholders saved that. They saved the money. They saved the money. So what do? We shall be debiting, in this case here, wages, and then we credit earnings. We credit retained earnings here because it's a saving for the shareholders. So basically, it's an equity component. If they, there are times they will tell you that they saved this kind of wages and we give them shares. Had we given them shares, then I would have added this figure here in the share. But remember, they have not hinted to us that we give them any ordinary shares. No. So we shall simply credit our retained earnings account. We shall simply credit our retained earnings account. So can somebody give me this figure? Can somebody give me this figure? So in total, what do we have there? In total, we have 10,272. Can somebody in this case here confirm? I want many confirmations. 10,272. Can somebody confirm this? I'm waiting for another person to confirm this. I don't think it's very hard. Yeah, 10,272. 10,200. I don't know why students are really hesitated, but I think 10,272 is correct. Yeah, Ibisu was confirmed. Margaret as well. So I don't think we have got any other equity component. Now we shall be able to go to the liabilities, of which we start with the strong liabilities. You start with the strong liabilities. The strong liabilities are the non-current liabilities. Non-current liabilities. So non-current liabilities, if you look at, we only have one. Non-current liabilities, you only have one. So if you look at your trial balance, there's a place where we have mortgage for the farm, mortgage. Nothing really is happening there. Mortgage, we simply pick it. So we have mortgage. We have mortgage. We simply pick it. So mortgage of 36,000. Mortgage of 36,000. We don't have any other non-current asset. So then we have the current liabilities. So we have the current liabilities. So current liabilities, ladies and gentlemen, what do we have there? Very many. We have payables. Remember payables. If we simply come here, you will see a place where we have payables here. Payables of how much? 9,000, isn't it? Payables of 9,000, right? Payables of 9,000. And then there is something that very few students will be able to see, that we have a bank overdraft. We have a bank overdraft. Very few students will be able to see this. We have a bank overdraft. A bank overdraft. Why am I saying it's a bank? Look at this. Bank balance, and it's on credit. Credit. Remember, ladies and gentlemen, whenever a bank balance is positive, it should be an asset. And assets are supposed to be on debit. But whenever you hear that bank balance is credit on the credit, that's an overdraft. That's an overdraft. So we have a bank overdraft of 1,800. Bank overdraft of 1,800. Bank overdraft of 1,800. I have in this case here to end my. And then remember something to do with taxes. Remember something to do with taxes. Taxes, the last note, if you look at the note there, the tax for the year, of course, cannot be a paid fee. Normally, that goes as a current what year tax liability. If you look at the last note, ladies and gentlemen, are you able to see in this case here? If you look at tax payable, thank you very much, Harvey. So in this case here, we have tax payable. Taxes normally, yeah, income tax expense is 1,800. Income tax expense is, and it is to be provided. It has not been paid. You know, tax, normally compute tax at the end of the year, and then we pay the following year. So it's tax payable, tax payable, tax payable, tax payable. So come and add everything to give us total equity and liabilities. And unless we are thieves, then everything should balance with what we had initially. Everything should be able to balance with our total assets. So unless we are thieves, it's only thieves who can't account how they raised their assets. So I believe the figure that you guys gave me, RV study with me, is 222,072. It is 222. It is 222,070. Is this figure agreeable with our assets? Is this figure agreeable with our assets? Is it agreeable with our assets? Yeah, it's balancing. It's balancing. Remember, a great student, whenever you balance, not even just a student, even at the workplace, whenever you balance your mathematics like this, you're supposed to stand up a little bit and you dance. The ninja style. Many accountants do not know how to dance. I've never gotten any accountant who knows how to dance. Never. But even if you don't know how to dance a little bit, you can do it just the ninja way. Very it means throwing kicks in there, but you can dance a little bit using, in this case here, the emoji. There are emojis given down there. Yeah, strong. There are emojis given down there. Strong. Yeah, emojis, emoticons from emotions. Simply get one emoji dancing. That is how you will be able to do what here. You'll be able to really be very good. All right. So now, ladies and gentlemen, that is it. So I don't think we should be able to continue a lot. This class is supposed to go to up to 8. I beg you to disappear quite early, 8 minutes of time, so you guys can concentrate in the other. So in terms of timetable, this Mwalimu will be coming when and when. I'll be coming on Tuesdays and Thursdays. And then we have Sir Joe Kenyani, who will be coming the other 2 sessions. I told you that this is going to be a very intense session. All right. And then remember, for my case, I will be doing those topics that are very sensitive. Why? Because I'm a group consolidation expert. I've worked for a group consolidation software firm for the last 20 years. Right? And they've been able to consolidate books of accounts for East African breweries, Equity Bank, KCB, using that company software. So there is no group question that can ever miss, in this case, in between my hands. No. So I'll be able to take you through group consolidations. I'll be able to take you through cash flow statements, both direct, indirect, and of course, other serious topics. You see, you can't miss a question on cash flow. So when you talk of cash flow, for example, the indirect method, I'll be able to show you great things. I'll be able to show you great things, as in German here. I'll be able to tell you, for example, if it is a cash flow statement, you will come and start the direct. You will come and start, for example, with profit before tax like that. And then you do your adjustments. So the adjustments I'll be able to show you shortcuts. For example, we say dial God's number for food, or you rest in peace. You dial God's number for food, or you rest in peace. So this all stands for working capital changes. So as we're seeing in this case here, what happens to receivables? We have in this case inventory, we have in this case here payables, like that. Very easy. So adjustments for depreciations and impairment, amortization, we have loss on sale of assets, we have gain on sale on assets, we have finance costs. Great stuff. One lesson like this, you become an expert of what here? An expert of cash flow statements. An expert of cash flow statements. I don't need very, very many lessons. No, FR is a paper that I taught and examined many years, for many years. So there is nothing like really, no. So I want to take this opportunity to welcome all students outside there to my particular sessions here, which will be running on Tuesdays and Thursdays from 6 p.m. to 8 p.m. And then, of course, we have my other colleague tackling the other two sessions. So it is my hope that you guys will be able to join us. And of course, if you're willing to join ourselves here, this is our number. Don't forget that we also have other classes being taught by wonderful teachers. We have a FR early morning, 5 a.m. to 7 a.m. We have a FR 6 to 8. And then we have a FR 8 to 10. I mean, the kind of options we're giving you, there are options that will be able to take care of everybody. So now how much are we charging for the live classes? It is 4,800 per paper. 4,800 per paper, and this is our pay bill. This is our pay bill. Our pay bill is 6242,839. 6242,839. Account number. If it's a FAR alone, you simply say a FAR. The 4,800 is per paper. Then remember, we have got all other papers. If it's a firm, again, you choose which session do you want. Are you an early bird? Are you an early riser? 5 a.m. to 7 a.m. We have 6 to 8. And then we have 8 to 10. You choose your classes like that. You choose your classes like that. All right. So that is it. It's my hope that you guys have enjoyed. I joined from LinkedIn and you're doing a fantastic job. Yeah, Ninja, we are not seeing. Can I get PDF copy for the question we did? Yes, Mohammed, why not? Yes. Yes. So come here. We have here FR agriculture, IS 41, like that. Yeah, notes and recorded classes are provided. We provide notes and we provide what you recorded classes. Yes, we have a great tool known as learning management system here. Thank you very much, Margaret. Learning management system. We'll be able to get access to everything. Otherwise, bye-bye. Much love to you from this Chief Ninja. And of course, if you want my personal number, just in case you're not able to get anybody at RCM, I'm always available for you. 0721-620-103. Bye. Thank you so much, Margaret. We shall overcome. And please look for students for this program. Remember, like when you come to AFM, like today, AFM, I have over 300 students. BDA, papers that I teach, Madon, big ones. So my 6 p.m. to 8 p.m. class cannot be any different. It has to be Madon, 300. Amen. Thank you. Yeah. I've brought 2. Thank you very much, RV. Thank you so much. Be blessed. See you next time.